What's up, everyone? All right, so we're going to get started here. Welcome to everyone joining here today. The topic of today's episode is momentum day trading. All right, so this is something that, of course, I'm a momentum trader, so I can definitely speak to this topic, and I'm going to share with you a couple of different components to momentum day trading. We're going to talk about what it is, what it isn't, how to find stocks for momentum trading, and exact entries and exits. And I'm going to share with you a case study of a recent stock that was just a great example of momentum trading. Now, I do this for what it's worth every day. This is the way I trade. I am a momentum trader, and I've been doing this for a really long time. As many of you know, who are maybe the first to, this isn't the first video you've seen me do, you know that I've made over $10 million trading stocks. I always tell you that my results are not typical, and I share my profits with you because I want you to know the person you're learning from here actually knows what the heck they're talking about. So let's get into it. Momentum day trading. I'm going to go to full screen here, and I'm going to show you the topics that we're going to cover today. So number one, the definition of momentum day trading strategy. Number two, a case study for momentum day trading strategy. And number three, I'm going to share with you some entries and exits. And what I'm also going to do for all of you guys is I'm going to give you a link that's going to be posted in the top comments and in the description where you can download some resources. So these 5 resources will help you in your journey as a trader. And one of the ones that I think you guys will really enjoy are the live trading archives. So everything you're going to see today, I'm going to show you a bunch of screenshots and things like that. But the live trading archives is kind of where the rubber meets the road, because it's putting the theory into actual practice where you can actually see my order execution. You can actually see me getting in, getting out, the way the orders are placed, what I saw in the moment where I pressed that buy button. So please check those out. They're free. You guys will only benefit from them, so I hope you do that. And let's go ahead and jump in. What is momentum trading? So the definition of momentum trading. A momentum stock is a stock that's moving quickly. So it's kind of like crazy to me, but there are so many people out there that are trying to predict what a stock is going to do tomorrow or next week. And they're doing all this research. They're trying to, is the stock going to have good earnings? And they're taking these positions and they're getting in before the move starts. They're hoping that they'll be able to be holding during the entire move. And when it works, it's phenomenal. I mean, it's great. But nobody knows what a stock is going to do. So you end up doing a lot of research and a lot of sitting and a lot of waiting. And for me, when I got started trading, this whole strategy of momentum trading, it's a reflection of my personality. And so for some of you here today, you're going to be like, this is exactly what I'm looking for. Now, for some of you who have a different personality, a different risk profile, you might say, no, this isn't for me. And that's okay. I'm happy to talk you out of it if it's not for you. But this is a reflection of my personality. So when I got started, I had a relatively small account. I couldn't afford to, number one, if I was holding overnight, I was feeling like I was risking losing half my account, because we know that some of the stocks, especially small cap stocks, they can be so volatile that holding overnight, you could be risking 50% of your account. So I had a small account. I couldn't afford to risk 50% of it. And I couldn't afford to tie up that money by just parking it on a stock and hoping over the next couple weeks that it did something. That wasn't going to work for me. So what I needed to do, and of course I learned all this through a lot of trial and error, but what I eventually learned that I needed to do was focus on stocks that were moving. So rather than trying to guess which stock might make a move tomorrow, momentum traders wait for a stock to start moving, and then we jump in as early as possible. And just like as a quick side example of that, just today, you could see this is my P&L from today, $2,921.98. And the biggest contributor to that P&L was GNS. All right, so GNS this morning has breaking news right at 7 a.m., and the stock squeezes up from $5 to over $8 a share. Right there. Boom. Straight up. So yes, did I buy it high? I certainly did, because I got in around 7. But I rode the momentum from 7 up to 8. Hit a high of 871. Here's another stock that's hitting my scanner right now, Lucy. This stock has just gone from $2 up to $3.80. Right? So this is the type of thing that momentum traders are looking for. We're looking for stocks that are moving right now. And I'll talk more about these scans, as we get further into today's class. All right, so let me go back to full screen here. All right, presenter view. And back to full screen. So momentum traders need to be constantly scanning the markets for stocks that are starting to break out of their standard range, like this stock Lucy is right now. And if I wasn't teaching this class right now, maybe I'd be trading Lucy because it is a perfect example. Obviously, the stock is moving quickly. This is what we look for. It's rate of change. It's moving. And so that provides opportunities. On this one, that pullback right there would have been a good entry. I always like pullback entries, so I let it dip like that, and then I'm getting in for that next wave up. I like to think, a little bit about trading in these kind of waves where you have stocks that they squeeze up, but inevitably they'll pull back a little bit as you have some profit taking and, maybe whatever, just a little bit of consolidation, and then they pull back, they sort of reset, and then I come in for the next wave up. So momentum traders use specialty tools for stock scanning and for searching for breaking news in real time. And the scanners that you see in the background, those are custom scans that I actually have a development team that works for me that built these scanners. And this for me is like radar. It is searching the market in real time for stocks moving higher. I have my audio alerts muted right now, but these put out audio alerts. So, I'm hearing beep, 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 beep. If something's going on, I'm going to hear it and I'm going to know about it. And that's important. And so as a beginner trader, what this allowed me to do was focus on, and of course I didn't have these same tools when I was first getting started, but by looking for stocks that were moving, what it allowed me to do was not tie up my account in stocks that were going nowhere, but basically take my account and put it into a stock that was moving, even if it was only for a very short period of time. So my trades can be very short, as I'll show you later this morning in some of the examples. Okay, so let's see. Now, this is a strategy that requires being willing to buy high and sell higher. I'm going to be honest with you. This is not Warren Buffett, buy low, sell high. Maybe on an intraday basis, on a dip trade, you could say you're getting in a little lower. But if the stock is up 50% or whatever it is, it's really not buy high, sell high, or buy low, sell high, right? So again, we could look back at Lucy. This pullback right here, at that point, it was still probably up. Oh gosh, it's up right now 156%. So when it was pulling back right there, it was still probably up a pretty considerable amount, maybe 20% or something like that. So let's see. There we go. So this is a strategy that requires buying high and selling higher. Now, when we buy something that's high, momentum traders have to use a combination of strategy and discipline to manage downside risk, while allowing us at the same time to profit from upside potential. There is downside risk on trading a stock that's already up 100%, right? It's up high, it's extended. So we have to use strategy and discipline to keep ourselves in line. So there will be times where you might look at a stock and, maybe Lucy right now is that example where you'd say, nah, it's getting a little extended up here. I have to mitigate my risk. I'm trading a stock that's up 184%. So do you mitigate your risk with smaller share size? Do you mitigate your risk by not taking the trade at all? There's different steps you can take. Right, and it's going to vary based on where you're at on the day and your go-to strategy and things like that. Your go-to strategy for trading momentum. So now we could talk for a second about day trading momentum versus swing trading momentum. So momentum can be both a day trading strategy and a swing trading or a short-term investing strategy. If you own Tesla in 2020 and 2021. That was a momentum strategy because the stock kept going higher. And there were people, even, big money investors that bought Tesla just to try to ride that momentum. When you have a stock that's super strong and something like Tesla that's very liquid, that allowed people with deep pockets to take, tens of millions, maybe $100 million plus positions and just ride that momentum as it's moving higher. So, this is Tesla from 2020 through 2022. You had a really nice long run of momentum. So on an intraday basis, there were a handful of days where it was volatile enough, the candles were green enough, they were moving up enough that you could have tried to day trade it. But I generally am going to avoid trying to day trade a $300 stock. What I've found is that I have a set of 5 criteria that I look at to evaluate whether or not I think a stock has the potential to go up, not just 5 or 10% in one day, which is maybe a good day for Tesla, but something like Lucy that has the potential to go up, 150% or 200% or something like that. Those are the types of moves where even if you only capture a fraction of that move, you capture a tenth of a 150% move, that's still a 15% trade, right? So that for me is what I really look for. And again, this was also based on, when I got started trading with a relatively small account, I didn't have the ability to, have a 5% winner on something like a Tesla really move the needle for me. I needed stocks that were going up 20, 30, 40% in order to really make some good money. So you can be a momentum trader as a swing trader, and some people might find that more appealing because it's going to be a lot slower, but it obviously is an opportunity cost because you're going to miss the intraday volatility. So why momentum day trading? Why did I choose momentum day trading? Well, as I said, when I started, I had the small account and I just wasn't able to afford the overnight holds. So I taught myself to focus on the type of stocks that had the potential to offer the biggest intraday ranges and just try to capture as much as I could in that range. So if a stock has an intraday range of 50% and I capture only a little bit of that range, there's still a lot of room for profit. So that's the definition of momentum trading. If you guys have questions who are watching on YouTube right now, feel free to leave them in the comments because I can read the comments. And of course, people watching this later after the fact, I make a pretty good point of responding to just about every comment that's posted. So feel free to leave a question and I'll try to get to it. So now let's look at a case study of momentum. Well, we've kind of looked at Lucy in the background there, but let's look at this example just from earlier this week. This was a stock, the ticker was MSGM, and it went up 3,000% in 2 days. All right, this is crazy. This is a pretty monumental move. So it goes from about $2 to a high of over $80 a share. Now, you're probably not going to hear about a stock like this on CNBC or whatever, MSNBC. These are stocks that are small caps, they're thinly traded. This stock, the value of the company prior to the move, gosh, I mean, it was probably less than $10 million. It really wasn't valued very highly because they didn't sell a lot of shares on the market and their share price was pretty low. So it had a very small market cap. But what happened? Well, it starts with breaking news. Okay, so now I'm going to kind of unwind this and really give you a good analysis of how do we find these kind of stocks. So in order for a stock to start moving, and of course, as a momentum trader, we really only want to be trading stocks that are moving. Usually, it's the result of news. Well, of course, one of the challenges is that all day long and all night long, there are news headlines that are coming out, right? So companies put out news headlines, they hit the PR, the news wire. Some of them are good, some of them are bad, some of them are neutral. And, they don't really, they don't all result in a 150% move on a stock. So the first thing that I look for to find the stock is for it to be hitting a scanner. That's the first thing. All right, so that's the tool that I'm using, and those are the scanners that I showed you back here. So I'm using these scanners right here. So SCLX is hitting a scanner right now. So I would have first found MGSM on a scanner as it was squeezing up. And then the first thing I do is I check to see what's the news. And in this case, I see that there is news. It's a debt to equity exchange agreement. It's not always the strongest headline, but in this case, it was more than enough, as it turns out. So the news comes out, and the stock, on light volume following the news, climbs up about 73%. That's pretty impressive. But the news was dropped at like 4 o'clock. So it was after hours. Usually after hours has very light volume. And certainly people saw it because it went up 73%, but not a ton. The next morning at 4 a.m., it's on the gap scanner right here. It ended up gapping up 182%. It's on the gap scanner, and of course, 4 a.m., that's very early for East Coast traders. It's even earlier for West Coast traders. But for day traders that are in Europe, that's not so bad. So they're getting up at, 9 o'clock in the morning, and then they sit down and they're, 10 a.m., they're looking at, they're looking at the gap scans, and they see, here we go, MSGM popping up. So it hit the gap scanner at 4 a.m., up over 100%. And between 4 a.m. and 7 a.m., right at 4 a.m., it pops up because more traders saw it, and then it has a period of sort of consolidation. Who knows what happens at 7 a.m.? At 7 a.m., TD Ameritrade and Robinhood come online. They don't allow trading before 7 a.m. A lot of brokers don't. But those are just 2 big brokers that come online at 7 a.m. So at 7 a.m., this stock is already up over 100%. It's got news. And there are people that just have their hands on the keyboard waiting to execute their first order. And so what happens at 7 a.m.? Boom, it spikes from about $6 up to $8.50. That's a really nice move. And I'll talk about the exact entries and exits on this in a second, but we're just going to analyze the chart here for a second. So it goes up to $8 right at 7 a.m. Predictable. Predictable once you know these and learn these patterns. Then it pulls back, it breaks out, goes up to $8.50, it pulls back again. Mid-morning, it squeezes through $8.50 and goes all the way up to over $28 a share, hitting a high of 580% gain intraday. All right. By day 2, it breaks $80 for a return of 3,000%. Wow. Okay. So let's talk about the entries and the exits. And I did see the question about the 5 criteria for whether a stock has a potential to make these kind of moves. So I have a class that I teach specifically on that. Those of you guys who download the 5 free tools, the 5 resources that I've made available for you guys, if you want, you can opt in on that page to our newsletter, our email blast, and we'll send you out a link where you can watch that lesson. It's about a 90-minute long, maybe it's almost 2-hour long lesson, and that one it talks about what we're going into here, but it goes into it with a lot more depth. So in that class, I talk about risk management, I talk about stock selection. During the stock selection chapter, I talk about the 5 criteria that I use to evaluate whether or not a stock has a potential to go up 100, 200, 300%, or if I think it's just going to stall out at an 8 or 10 or 15% gain. And then in that class, I also show you a bunch of charts and on entries and exits. So check that out if you're interested. All right, so let's talk about entries and exits here. So the first clean entry for most traders would have been at 7 a.m. right here, right at 7 a.m. with a long, probably at like 650. All right, so an entry around 650, and it squeezes up to 857 or 854, basically right on that candle, which is a solid 20%, almost 30% return in less than 5 minutes. So remember, these are quick trades. Now, this is exactly what I was looking for when I was getting started trading, because, I felt like I was trading. I had money in my account, but every time I took a trade, I was afraid of losing that money. And so, what I would do is I would just get in and get out as quick as I could, because I was measuring my risk, in a way by exposure risk of how long I was holding a stock. So the less time I was spending holding a stock, the less risk I was exposing myself to, right? So 7 a.m. right here, first entry right there. That's a nice trade, and I'll show you my actual trades that I took on this, but I'm just going to show you the chart for to begin with. So that was a good entry right there, 650. It goes up to a high of almost 850. And then it pulls back and it starts to form this resistance at about 772. That's the blue line here. It taps it once, twice, 3 times, 4 times. It can't break it. But when it comes back up and breaks it, there's 2 ways to trade this. One is to get in based on what you're seeing on the level 2. So the level 2 is a tool that traders use. It's right here. So for instance, if it came up to 72 and you saw these numbers represent the sellers. So if you saw a ton of sellers stacked at 72, you probably wouldn't press the buy button because the sellers are right there. But if those sellers were thinning out and there was only one left, then it looks like the dam is about to break, and that's when we could see that rip, and that's exactly what happened. The second way to trade it is to wait for it to break and then buy the retest of that 72 level. So it broke, which is the top and tail of that candle. It then came back down, retested, and then it went higher. Both are fine. Either and I will do both depending on the setup of the stock. All right, so that ends up going to a high of about 850. And then it pulls back and sells off. So that was the second trade, the break of 772 for a second test there of 850. All right, now the third trade on this was a break of the pre-market high of 854. All right, so I guess this must have been about 820, and that was 850. All right, so this 854 level, it squeezes up right here and taps about 848, really close to breaking that level. It then pulls back, and when it breaks through, all of a sudden we get a lot of volume. It's very common that we see a lot of volume around these breakout spots. It's a combination of short sellers covering and long traders adding to positions. So really nice breakout here from 850 up to 950. That's $1 a share. You know, with 1,000 shares, that's $1,000 of profit right in that kind of candle. Okay, then we get a pullback. So this was at 950. You get a 5-minute pullback right here under 950. And when it breaks through 950 from there, it rips up to 16. And what do you see happening at 16? Another pullback right there at 16. And then from there, it rips up to 28. Now, one of the challenges with these stocks, naturally, is that as they get more expensive, the spreads can get bigger and the whips can get bigger. So you can have these big pop and drop kind of moves, and those can be really hard to manage risk on. I have consistently found in my career that I make more on stocks when they're under $20. And when they start getting more expensive, that's when I can catch some pretty big losses at times. So these were my trades on MSGM. You know, I didn't murder it. I didn't crush it. I did well. I finished it $5,374.12. And what you can look at here is that my average winners were about $200. And my average losers were $75. So that's a really good profit to loss ratio on that stock. And my accuracy was 75%. In total, I took 40 trades, 40 relatively small trades. The average hold time was only 3 minutes for winners and 4 minutes for losers. So these are fairly quick trades, getting in, getting out, getting in, getting out. The nice thing is that my biggest loss was only 150, but my biggest winner was 1,200. Now, this right here is momentum trading. And I understand that some people are going to say, wow, this type of trading is too fast. I don't think I could keep up with it. And if that's the case, then absolutely, you should follow your gut and you should focus on a strategy that is a better fit for you. And that could still be a momentum strategy, but you could just use a slightly different strategy for entering and exiting the trades, so you hold longer, or you could focus more on swing trading if that's what you prefer. So, you know, right now you've got Lucy doing this. This is what we would call a 5-minute setup. So you have this squeeze here from 2 all the way up to a high of 460. It's at 169% right now. You've got 2 red candles. One of the problems that I sometimes see on this, MACD has crossed over against the trade. One of the problems can be that you got such a big move that traders are really just afraid to buy it this high. So unless maybe some big short seller hits the buy button to cover and that triggers some more short covering, it's probably going to be more of a fade from this point. And that's okay. The window is right here. And look, if you have a stock that goes up 200% or whatever it is in 15, 20 minutes, you can't ask for a lot more than that. But I'm telling you, you will see these setups again and again and again and again. So it's true that you probably should have started learning trading sooner. Maybe you should have started a year ago, 2 years ago, 5 years ago. And if you didn't start sooner, there's nothing you can do about that. But today, especially after watching this episode on momentum trading, you now have the opportunity and you have the knowledge of this strategy, at least on the high level. So I hope that you guys dig in and start learning more about it, because this is the strategy that I've been trading really since I turned the corner. So my whole career as a profitable trader has been trading this strategy. Prior to this, I was trading some mid caps, some large caps. I was trading options. I tried trading penny stocks. I was doing reversals. I was doing a little bit of everything. I tried shorting. I didn't find any consistency though. So this is the area of the market where I've kind of found my bread and butter, trading these types of stocks. And I have traders that ask me about momentum trading all the time, and I'm happy to share it with you. I encourage you guys to check out the class or to check out the free resources that I've made available to you, because if you find this interesting, you do not have to do it alone. There are communities of traders that are trading momentum. Now, there's some communities of traders that are focused on shorting momentum, shorting strong stocks. Seems kind of crazy, but it's a strategy that some people like. There's also communities of traders that are focused on the long side, and then there's just communities of traders that do a little bit of both. We've got short side traders and long side traders at Warrior, but I'm primarily a long bias trader. So I encourage you guys to keep learning. These are some of the candlesticks that we talk about in the classes that I teach for students over at Warrior Trading. You'll see examples of this in the live trading archives for those of you guys that download the free resources. And you'll see the examples of the micro pullback strategy and the small count strategy as well. So I hope you guys check it out. I want to thank you as always for tuning in. I want to keep these little classes concise, brief, and to the point. I think that we've done a good job of that today. Please post questions and comments that you have down below. I will come back through and answer them. And if you want to keep learning, make sure you get the free resources, and then you'll get an email to register to one of my free classes that I teach periodically. And those would be a good opportunity for you to learn more about the 5 criteria that I use to evaluate whether or not a stock really has some serious potential. So thank you guys for being here. As always, I'll remind you that my results are not typical, and there is no guarantee you'll find success whether you trade with me or you learn on your own. So make sure you manage your risk and you practice in a simulator before you put real money on the line, and don't try to blindly follow me or anyone else. Take it slow. All right, we'll see you back here real soon.